This
County
conference will now be recorded.
Lunch and Learn. A great presentation today, something that is near and dear to everyone's hearts. It's trying to keep as much money in their bank accounts as possible. And as people get ready to prepare to start doing taxes at year end, their income taxes for their business, there's a few things out there that if you know about them now, maybe you can do a little careful planning, make a few adjustments to try to keep as much cash as possible. And that's the goal, to try to be as good to your business as you possibly can. So today's presentation is year-end tax tips by Dennis Hoffbeck. Dennis is a CPA and is the owner, operator, chief cook, and bottle washer of DM Hoffbeck PLLC, with several offices, including one in our county down in Fairfax. So with that, I will turn it over to you, Mr. Dennis. Thank you.
Thanks, Jordan. I'd like to start by thanking the Renville County EDA for hosting this seminar. I feel it's very important and very dear to my heart. I know businesses can work so hard, but you can't be an expert of everything. And I feel that's one reason I feel like I can be a successful business is I always deal with the top-notch people. I mean, if I have a question, I know the attorneys, the CPAs, the people in the IRS. It's just so important to make sure you're dealing with a tax plan. Thank you. Okay, tax planning is what we're going to discuss today. And I know to some people it means different things. I've had clients that were worried when they do tax planning. They wanted, are they going to lose 100,000 or 300,000? They just wanted to make sure they had a big number for carrying forward, which I never understood. Because if you do tax planning correctly, you could probably get them a good $10,000 to $15,000 refund because of the earned income credit and child tax credits and other items. So that made a lot more sense to me. But tax planning is basically the process of looking at various options to determine when, whether, and how to conduct business and personal transactions to reduce or limit tax liability. And what we're basically doing is tax avoidance, and that's legal. You can't do tax evasion. I mean, if you're doing something that's deceitful, fraud, or concealment, if the IRS catches you, your life is basically ruined. They're not a very forgiving agency when you deliberately try to defraud the government of their taxes. Tax avoidance, one of the huge things there I want to mention is it might not be you're just trying to not pay tax each year, because then you're probably kicking the can down the road, and all of a sudden when you retire, you could have a huge tax liability, and you really got to watch out. Because to me, how many people think the tax rates are going to go up? I mean, with all these programs we've had to have to keep the economy and the nation afloat, they do have to get paid back sometime. So as I kind of reiterate there, tax planning is not trying to reduce income to a minimum. It's rather planning the timing incomes to your most advantageous situation. So as I mentioned before, if you know the tax rates are going to be increasing or new taxes will be added to your taxable income, your business probably will not be deferring income or preparing expenses to have a lesser tax bill for 1 year. Actually had a client come in yesterday to do tax planning, and you don't want to listen to the bar talk, but the bar talk was kind of too. It's just like, wow, these rates might just go absolutely through the roof. Fortunately, most of those in the Biden plan that were really extreme did not pass. So I'm excited about that. And one of the other important things about tax planning, the hardest part for me is the unknowns. I love tax planning. I love helping the clients. The very difficult part about tax planning is you don't know what's going to happen. Remember a few years back, the 179 expense was not raised. They didn't raise it till January, retroactive to the last year. Very hard to tax plan when you don't know what the rules are. Another example this year was with COVID. We had these PPP loans. They were taxable on the federal and Minnesota side, so that's when I met with businesses. You have to let them know, well, yes, it's a good thing you got this money, but it's currently taxable. Well, fortunately for us, the federal government, after getting quite a bit of feedback from people like the EDA and other business organizations, they did make those PPP loans that were forgiven not taxable. Huge benefit. I mean, they're suffering from a pandemic. That was great, but it was still taxable on the Minnesota side. So, that affected my clients. I let them know that, and fortunately, Minnesota did allow the PPP loans that were forgiven to be non-taxable, but it actually happened after a lot of the tax returns were filed. The happy part there was Minnesota at least didn't make the tax preparer amend the returns, so we basically would get calls from clients saying, yes, that letter arrived. Let's explain it to them that, while the PPP loan was forgiven, that's why you're getting a refund, or they might have had unemployment up to 10,200 that was forgiven, and that's why you got a letter from Minnesota because of conformity. Next slide, please. Now, when I remember the big change for me was the Tax Cut and Job Acts, modifications for the taxable years 2018 through 2025, and this modified the 1986 code. And when it did that, I was just like, wow, this is really incredible. They're modifying the 1986 tax code in a major fashion. It was, some of the major changes were a 21% flat tax rate for C Corps. Why do I mention this? I have a lot of C Corp clients. There'll be the small grocery stores, gas station, farmers, and the tax rate was actually 15% for up to 50,000 of income. So when the people on the newspaper bashing whoever was in charge of that, I won't name names, but they were saying, oh, all these corporations got this huge tax rate decrease. Well, actually they didn't. It was actually a 40% increase for a lot of my clients that were small businesses. Why do I mention this? I mean, if the rate's going to go from 15 to 21, you're probably going to try to make sure that 50,000 is full. And then currently they're talking about that rate going up to 26.5%. So you don't want to just look at this year's tax return. You want to look at the future also. Another big change they made from the Tax Cut and Job Acts was the qualified business income deduction. Very nice, very beneficial. And I know staff would get very aggravated because they like, we're accountants. We like concrete answers. We want to know what we can do. And basically what I've learned is that, until it goes to court, it could be 5-7 years. Then we'll actually know what the rule stands for, because there's gray areas in there. So I really thought this was an ordeal with this change and all the modifications. But then COVID happened. Next slide, please. And COVID was, wow, the pandemic tax law overviews was just incredible what they had to change there. And I mean, they would change some stuff to some day. I'd work with a banker on a PPP. Sometimes in the morning, this is a form you had to help the client with. The afternoon, they had a new form. They kept changing the rules. Very interesting. Very exciting time, but it really took a lot of effort and time. And I'm just going through this now because like the PPP loan that has been giving out, but the ERT still is available. It would be a retroactive, tax credit. If you were eligible for the second quarter in 2021, you would want to apply. It's a very great program if you can get it, but there are actual tax consequences to this one, where the PPP loans forgiven were non-taxable. The ERTC, right now would be, you'd have to decrease your expense. So say you had 20,000 in payroll expense, they gave you 7, it would be down to 3,000 in payroll expense. The ERTC was really an incredible program. It started with the CARES Act, and it changed a lot, because before it was a PPP loan or the ERTC. It wasn't both loans you could apply for. You had to have 100 or few employees. The ERTC wasn't a forgivable loan. I'm sorry. It's a tax credit that goes on your payroll form. And who qualified? It was kind of tough to start with, because you had to have a reduction in gross receipts of 50% or more for the same period in 29. Well, that's quite a difference in gross receipts. They didn't care about your expenses. They just were concerned about that. But the credit available was really, really impressive. I mean, 50% of 10,000 in wages. So if you paid an employee $10,000, you get a $5,000 tax credit. So essentially, I look at it as that employee that's getting paid $10,000, you really only paid $5,000 out of pocket. Well, then in December of 2020, they came up with the Consolidated Appropriation Acts. And this was really good, because you could actually do the PPP loan and the ERTC credit. And this is really huge for a lot of people. I'll just use an example of sole proprietor. You cannot use your wages to get an employee retention tax credit. I have a business where if my wife, my sister, or the nephews help me out, I don't get any help with that. Strange part, it's the government. If I was an orphan and had no relatives, they'd give me the employee tax credit. Where they came up with that, I don't know. I'm thinking some orphan or someone with no family had some really good political ties there. Another huge part was the company size for this. All of a sudden, it was 500 or fewer employees. So that was made a lot more eligible. And then the really nice part was reduction in gross receipts 20% greater than the same period of 2019. So, I mean, that's a huge difference. You go from the 50% down to the 20%. And another huge difference was, instead of paying 50% of 10,000 in wages per employee, it's 70% credit and this first CAA Act was from January 1st through June 30th. And I'm sorry, this is a lot of overload. I'm just trying to get the point across that if your payroll or whoever you have doing it has not looked into the ERTC, you probably want to do that. It was one of the aggravating thing about tax planning is if I could be doing someone tax planning in end of October, and they know they're going to get this ERTC credit for the fourth quarter. Well, when Biden did the Infrastructure Act, they actually took away the fourth quarter. This is one of the things that greatly aggravates me about tax planning. It's like October 30th. Hey, I'm ready. I know what's going on. Yeah, you're getting a $30,000 employee retention tax credit for fourth quarter because you asked for an advance. So you kind of have to consider that when tax planning for what your income is going to be, because it makes less of your expenses. The only trouble was if I met with someone in October and they decided, well, I'm going to go buy this thing because I really need that. And then, I get $30,000 less, but I buy a $30,000 piece of equipment, I'm good. Well, November, they changed their mind. So there's people that are like, had plans for that. And I mean, there were warnings, but there's always warnings that it might get taken away the fourth quarter. But I just think it makes very important you keep in touch with your tax planner to make sure that you know exactly where you are. I mean, it's kind of aggravating part because, you're planning and the government changes the rules. I mean, they'll also retroactive. Well, this was basically retroactive. It was in November, and they're saying the advance you qualified for the last payroll quarter is no longer valid. But it's a huge program, and that's why I'm really mentioning it. Gosh, if this can just help one person on this today, or people, it's just huge. Because I look at, maybe you got a family business, but you have one employee, just say one employee. I actually had this happen. They had one employee, and I'm just like, well, you know, if you pay, well, if he hits 10,000 wages, you actually get a $7,000 tax credit. I can't recall a time that there's been such a lucrative tax credit for this. So it's very important. There's a lot of rules. I mean, with the PPP loans, there were a lot of rules too. They were constantly changing it. But my point here is please contact the person that you have do your tax planning so they can help you with this, or you can email me and I can answer any questions. Does anybody have any questions right now? Okay, I believe I'll move forward then. Next slide, please. Well, as I kind of went, yes, on this slide, just some of the payroll protection program items. I mean, when I said it changed daily, I wasn't kidding. It went from a cover period from 8 weeks to 24 weeks, which was good because, I mean, it was kind of hard. You're helping employers employ people for 8 weeks, but it's a lot better you help them employ for 24 weeks. And it went to other stuff too, like utilities and stuff. And it was just a very interesting time because I know a Schedule C and F were not eligible to start with if they didn't show a profit. So you really had to keep on top of these things. And I mean, there was a first draw and a second draw. But then luckily they did change the Schedule C and F to be by gross income. So basically, I had some farmers that weren't qualified. They had $100,000 in gross income, so then they got $20,833 in a PPP loan that would be forgivable. Definitely worth your time to keep in contact with your CPA, and the bank worked on these a great deal. And it was like constantly changing. I know one thing with being a CPA, we do go through a lot of continuing classes. I actually listened to JJ, the CPA, on YouTube. He provides a lot of valuable advice. He's a person that's actually there to help the small business owners. I know I went through quite a few YouTube videos at night. That was like my last hour and a half before I go to bed. I would go on the YouTube and I listened to JJ, the CPA, to see what's changing with everything. Very beneficial. One thing I was disappointed was that SBA had disbursed about 800 billion of the 813 billion. And there was, obviously, I'm sure you've read about a reason why you don't want to do tax evasion. A lot of people on the PPP loan, I shouldn't say a lot, it helped out a lot of people. But some people you heard were buying Ferraris. I believe a professional football team or basketball team took it out too. And there was a bunch of feedback on that, but they're figuring at least probably 76 billion will be returned. I know the program was open, it was advertised a long time, but I mean, there's still people that didn't get it. So my goal was really that they returned the money to let a few of the businesses that didn't get it apply, but they did not allow that to happen. I believe the money went into the infrastructure bill, just like the fourth quarter employee retention tax credit. But luckily, the PPP loan turned out well, with the loan proceeds that were forgiven being non-taxable on the federal and state side. Made it a little tough during tax planning, but it ended up well. Next slide, please. Sorry. As mentioned before, the employee retention tax credit was refundable credit. Huge. Please make sure you check into that if you're eligible. Just remember, if you and your family basically aren't eligible, but if you have employees that are not related to you, you are. Very good program, a lot of dollars for the bank. Originally supposed to be through December 30th, 2021, but unfortunately they took the fourth quarter out. I mean, when they were taxing the PPP loans, I had heard a lot of stuff. People been talking with Congress, the ERTC fourth quarter. I really hope they change it because it will be detrimental to some people. And it was really a great idea too, because all of a sudden, you know, people are unemployed. You can hire them and you can get them trained in, you know, and the government basically picks up 70% of that. Next slide, please. This here, I'm not going to go through it, but it's a flow chart for the RTC for the 2021 year. If you have questions on that, the last page of the presentation has my email or contact your current CPA. Thank you. Next page. Potential tax laws changes over time, and this is one of the main things I want to stress. I mean, we are in such volatility right now with all these new laws and changes that, I mean, the tax rate changes are likely going to start in 2021, and I am thinking they have to go up. They have to pay for all these items they're spending because the government, I don't see them cutting back on anything really. So the infrastructure bill, as I stated, that was a termination of the fourth quarter ERTC. I mean, I hope they change that back because government has tried to help businesses, throwing a lot of money their way. And I think as a business owner, we realize we're going to have to pay it back. I mean, through taxes. And then now, I mean, one of the huge thing was the Build Back Better Act proposal. And if you remember before, I was stating how the small C corporations, the first 50,000 was taxed at 15%. Well, now all of a sudden it's going up to 26.5%. So that is a 11.5% increase, which is pretty big, obviously. And then the top tax rate on individuals would rise up to 39.6%. So if you have an S corp, you're paying yourself, and you have excess net income that could easily be taxed at your higher rate there. Now they're also talking about the current 20% QB qualified business income deduction basis on business income could be limited for higher income tax payers, or it could be killed entirely, which, I mean, that had a lot of effect. You know, I had clients that weren't receiving that, and all of a sudden they could write off 15, 20,000 off their taxable income. So that was very huge. One thing that really scares me is the expanding the base of the 3.8% net investment income tax. This was one that kind of scared me because I can understand it. You know, it says net investment income tax. So I can understand that you're renting out farmland you sold. They got to count the farmland as an investment because you weren't actively farming, so you pay this 3.8%. Well, if you were actively farming, then you didn't have to pay that 3.8%. And you know what farmland values are, that can get to be a very huge number. Well, currently, what they're planning on doing is, it was basically the silent partners didn't pay, but now they're trying to get it so they would impose a tax on all pass-through income for an owner. It doesn't matter if he is actively participating or not. And I'm just sitting there thinking, okay, so my tax rate basically went up 3.8%, and I'm paying SE tax. I went in a business, and it's just like, wow, a 3.8% tax increase. I'm hoping that does not go through. And as mentioned before, one of the tough things about tax planning, keep your mind open, is there's going to be changes and they're retroactive. That's just has a huge difference on what could be. I mean, it's very hard to plan when in January they change something for last year. One thing you also have to watch out for is when you're tax planning, we're in the great state of Minnesota. South Dakota does not have a state income tax, and I can't remember if there's 9 or 13 states that don't. I guess I didn't bother to look that up, but Minnesota, we obviously do, and Minnesota doesn't always like conforming to the federal government. I know one of the nice things the federal government had on capital gains was if you're in the lower 2 tax rates, you don't pay taxes on it. Well, of course, Minnesota don't care. They count it as income, or they tax it at your regular rate. Another thing I've seen clients get or was non-beneficial was some of the depreciation. Minnesota on section 179 would only allow 20%, and then you'd have to take the excess and subtract it over 5 years. Well, when you're dealing with big numbers, this can be a very huge detriment to the business. I mean, I'm happy they have made some changes now on the Section 179. Minnesota does allow that. On the bonus depreciation, though, where you can get 100% on federal for property 20 years and under, you still gotta put that back on the Minnesota return and subtract it over time. Okay, next slide, please. Is there any questions? I'm moving kind of fast. Okay, looks like we're good. Okay, the year-end tax planning. This is a year where you may be a good time to claim more income. Just because taxes are going to be going up. I mean, and when you do this, I mean, review the tax projections for the next few years. Kind of figure out where you think your business is going. These are just, with the inflation amounts, these are really difficult times. I mean, you just don't know. I mean, you got to make sure your business is getting more income because your expenses are getting more income. And then you got to try to figure out the taxability about this. The one huge part I mentioned was 3.8% net investment tax. Well, as an S corp, whatever profit there is after my salary, I don't pay SE tax, but I'll be paying 3.8% net investment tax now. So that's fair if everything goes through. So I mean, that's just a huge consideration. You can't just look at you don't want to kick the can down the road. You want to make sure. I mean, I always recommended if you know you're on the verge of going into the third tax bracket, try to stay in the first two, because I mean, you go from 12 to 22%. So I mean, it's not bad to pay taxes. I mean, I encourage you to pay taxes. If we didn't pay taxes, we don't know what the country would look like. So, and then I need to review like the ERTC qualifications, see if you do qualify. Because if you do, you know, all of a sudden, you know, 70% of payroll. So if you have three staff members that qualify because you're down 20% in a quarter from 2019, I mean, you're talking about all of a sudden you got $21,000 of less expenses. So you might, you know, that 21,000 might have an effect on your business. So you definitely want to take that into consideration. And it does no good to, I mean, if you amend the ERTC and it's paid in 2022, it's still less expenses for when it happens. So if it happened in the third quarter of 2021, even though you didn't get the money till 2022 or apply, that would still go against your 2021 return. Next page, please. One thing I do want to mention that's very important, I know I didn't really get into specifics. I just kind of wanted to open your eyes to some of the major changes. If you do have any questions, please don't hesitate to contact me. One thing when you are doing tax planning for your business, please remember to consult with a reputable individual or company. And I just saw this today because I just saw an ad on Facebook that said, expert mechanic. And I'm thinking, well, I don't think there's a title for an expert mechanic. I know if they're really good, there's I believe a blue ribbon mechanic and there's certified mechanics, but there ain't really a expert mechanic classification, I didn't believe. And so I thought, you know, if people think they're going to an expert tax planner, I mean, if they don't have any credentials, I mean, I'd be worried. You work very hard for your business, and you want to make sure, sorry about that, that it's protected. You don't want it to get ruined because someone messed up on your taxes and they don't have any skin in the game. So, I mean, when I saw that expert auto mechanic, I thought it was kind of weird. But I know when you're looking for someone to do a tax plan, I definitely recommend you find a CPA or an enrolled agent, you know, because they actually do have credentials, education, and training. I mean, a CPA does at least, well, they're required to do 120 hours of continuing education every 3 years. And believe me, after this COVID, PPP loans, ERTC, we are getting way more than that in there. I mean, I've talked to larger CPA firms, and because I'm just thinking, gosh, I'm the only CPA in my firm currently, and I have all these worries, and I'm really spending a lot of time on these matters, and they're just like, we're in the same boat. You know, they go, we just got out of a 2-hour meeting about all these changes they're making. So you definitely want to consult with someone who is going through the training education. And then also, you know, do they consult experts in the field? You know, if they're just like, oh, I read an article in the paper. Well, you want people that you want your CPA or tax planner to be dealing with people that are on top of the field. I know I deal with CPAs that teach classes for other CPAs through the US. I mean, I wish I could get $430 an hour, but they're really good. I mean, basically you do there is you just, this is what the client did, is this look all right? And so far everything's been great. So one of the huge things when you're in tax planning is there's just so many changes. Please make sure you consult a reputable individual or company. And please
Dennis,
don't, yeah.
I was gonna say, Dennis, this is Jordan. If I got a question or two, if I could, if you don't mind.
Oh, you bet.
So knowing that you know, like you talked about, you know, we're getting to be the end of the year. There's likely to be some tax changes, you know, coming down the pike. Is there kind of I don't want to say low-hanging fruit, but are there a few things that, you know, as you start, you know, talk to your tax preparer, talk to your accountant, you know, things we should be doing? Should we, you know, or at least ask them for advice, you know, should they be prepaying, you know, for stuff, if, you know, try to get as much expenses this year, or vice versa, or, you know what I'm trying to say?
Yes, excellent question. Yes, and that's where too, they should definitely be meeting with them and going through their current situation, what they think the future is. The person that is doing the tax planning should be asking you questions about your business. You should be asking, yes, I mean, basically telling about your business. And I mean, I'm amazed that sometimes people don't think something's deductible, and it's definitely a legitimate business deduction. So yeah, I mean, definitely. I mean, and I would encourage you. I've had some clients that stop by the beginning of December, then you stop by the, you know, the end of December just to see what has actually changed. I mean, it can be pretty scary. I mean, if in 2022, you know, these rates are definitely increasing, how is that going to affect you? What if you take that $20,000, $50,000 and all of a sudden I'm going to be paying an extra, you know, 6% of tax on that with the changes? It's like, well, gosh, I think I'd rather pay that now, you know, and be more safe. I mean, that's where you might, I mean, it's huge. A lot of times I have people, I deal with a lot of farmers, so, and I am a gentleman farmer, I guess you call it. I don't know. But there, it's just like, they come in and saying, do you want to buy a combine? And I'm just like, basically, well, do you need a combine first? Because you don't want to buy something just to push taxes off. But the one huge thing is, well, let's look at what's happening next year, the low hanging fruit, like you said. All of a sudden, it's like, well, they're talking about this change, so your tax is going to go up 5.5% on the corporate level. Well, then definitely it's like, well, I want to postpone that machinery or postpone office equipment or a fuel tank for a gas station. So, I mean, and then all of a sudden you might be too, it's like, well, I'm not really getting much of a discount for prepaying expenses. So I think I'll use them next year when the rates go up. Like I said before, it's just like really good to know where you are in the tax system with the rates and stuff. Cause I mean, I always like, I mean, I think it's pretty crazy. The government goes from 12 to 22%. I mean, that's a 10% tax increase on the individual side and that would affect businesses because they have the 1040s, you have the Schedule Cs and Fs, and you have the pass-throughs. So does that kind of answer your question? Anything else?
Hey, Dennis, this is Shane Woolman from City of Renville.
Hey,
I got
Shane.
one question. Hey, Dennis, got one question for you. I've had some businesses ask about tax prep software such as H&R Block and TurboTax. I guess, what is your honest opinion with those, or what should we be telling the people about those?
They can be dangerous because a lot of times they ask questions that you really don't know. You think you know the answer to, but you don't. It's and I mean, they're not free either. I mean, I remember I was talking to a gal at a business person at Chanhassen, and she, I can't remember if she hired TurboTax or what it was, but it ended up costing her like $200 some, and I'm like, well, CPA probably wouldn't have charged you that in our neck of the woods just because it was a pretty simple return. I mean, if you're really experienced with tax software and stuff, but I've always kind of hesitated with recommending it. I know we get quite a few clients that have used other software tax programs, and you know, sometimes, hey, they missed out on deductions and it wasn't beneficial, but sometimes they took more expenses than they should, and it they, you know, hopefully don't get caught. It's just, sorry, having trouble with the camera here. So yeah, it's, and I mean, there's just, well, that's, yeah, there's just so much. I mean, I think they have people that answer your questions too, but I would definitely, you know, if you're going to the business that's local, you definitely know they should stand behind their product. So
I suppose if it's more complicated, talk to a person. If you are, it's your personal, you know, you're working for a paycheck, you have one source of income and that's it. Maybe something easy like that. But if it's at all complicated, talk to a pro. Is that a good way, maybe, Dennis?
yeah, and then even there, you gotta, I mean, like the federal this year, they did what was it, $300 charitable donation could be deductible on the 1040 if you did not itemize. And I know Minnesota has special rules on that too, but I mean, the tax software should ask you what were your charitable donations. So I mean, that should be okay, but it never hurts to get go to a tax professional after tax season just to have them look over. They might, you know, you get charged a little bit for it, but at least you'll have the peace of mind. Because a lot of times people don't know what they're doing wrong. You know, I know people have programs to do payroll, and sometimes they won't be, they'll have a simple plan, but the employer doesn't realize he's supposed to be contributing to the employee's retirement plan too, or not offering them to all employees. So just be very cautious. If you have any doubt, definitely seek professional help. And there's just so many little nuances on the tax laws now too. So
Gotcha. One other question, if I can ask, Dennis, and I don't want to say it's kind of a commercial, but just letting folks know that the SBA's EIDL program, their economic injury disaster loan, that is going to be sunsetting at the end of this month. So you got, what, about another 3 weeks plus or minus to apply. That is applied for 100% online through sba.gov. If you got questions or need help with that, let me know. I'm happy to get you connected to the pros on that. Are you seeing a lot of folks taking advantage of that, Dennis, or how's that working out?
I've had a few of the clients that could borrow major amounts do it. It seemed like a lot of the clients, the PPP loans help, and they had those EIDL grants to start with. That really helped a lot of people. The ERTC has been huge, but no, I've definitely seen people doing those EIDL loans. I'm sorry, what was the correct name for those?
Yep, EIDL, economic injury disaster loan. Yeah. Perfect.
Yeah, and I mean, it's been huge for them. I would definitely look into that before the end of the year to see if it will benefit you.
Excellent.
I mean, they've
I don't
had
want
so
to be
many
monopolizing with questions. Are there other questions from folks? Feel free to turn on the mic or camera or both, and or in the chat box if you want. I guess one more question for me, Dennis. What are you seeing, you know, 2 years ago, before the pandemic, economy was humming along pretty good. Things were maybe starting to slide just a little bit. Last year, ups and downs, talking with different folks, businesses, bankers. I mean, really, nobody takes too hard of a look at 2020 numbers and probably 2021 numbers. They're just such a statistical anomaly. What are you seeing on general business conditions right now? Are folks, generally overall, there's always good and there's always bad, even in boom times or bust times. But what are you really seeing on economic conditions, Dennis?
Well, I've been surprised. I mean, people have been looking at prepaying expenses and deferring income, but they also mentioned the concerns of how maybe that ain't such a great idea because what 2022 might bring. So, I mean, the businesses in the U.S., they were very fortunate enough to get a lot of help, but the time's going to come to pay that help back. So.
Gotcha.
Last
call.
Hi, this is Catalina. Thanks, Jordan, for the invite. Dennis, are you able to look at a business and then let's say that you're already working with different people, but are you able to look at a business and make suggestions on how to improve as far as like the tax?
I'm sorry, could you repeat the last part there? How to?
Like as far as for your taxes and things like that.
Kind of a second opinion, are you saying?
Correct, yes.
Oh, yes, we really enjoy doing them because it gives me the opportunity to see how other people are and to give recommendations because this is really a changing climate. I know with, employers have been having an interesting time with keeping employees. There was 1%. I found it crazy what they said what CPA firms are going to have for turnover. I don't know the exact number, but it was, let's just say it was a lot closer to 100% than zero. It was not a good thing. So, but no, we like doing that because we can also, we try to point out tax savings. I mean, we give you the choice, we'll have a checklist and go through and, are you doing a health savings account? What are you? How are you paying your employees? I mean, does it look like a lot of times we have people all of a sudden I've been getting calls, it's just like, gosh, I can't pay my bills anymore. What do I do? And I'm like, well, your rate hasn't changed in 5 years and inflation, your expenses have just been going through the roof. So that's the kind of business planning I really enjoy doing, setting the options for you to make an informed decision to decide what you want to do.
Thank you.
I don't want to keep monopolizing it, but that brought up another question for me, Dennis.
Oh, no problem.
As you go through and do taxes, you've done enough of these over the years, different industries of businesses, farmers, restaurants, grocery stores, this, that, and the other thing. Do you kind of see some industry standards that, if you're operating a convenience store, your payroll should be, 40 to 45% of costs or whatever that number is? Do you kind of sit and look at folks' numbers and try to find ways to help them improve their bottom line outside of taxes, but how to, what the industry standards are kind of thing?
Excellent question, Jordan. I'm really glad you brought that up. One of the huge things we do is, and I do it with my own firm, sorry. What is my payroll percentage to revenue? And I do that at businesses too, because as you mentioned, restaurants, there's a lot of theft, like in bars and restaurants. It's usually pretty high. And I used to be an internal auditor, and I did audits for a CPA firm I worked for. And we're really big about putting them internal controls in because there's really nothing worse than having some employee, if they steal $20,000 from you for 5 years in a row, all of a sudden you're out $100,000. I mean, it doesn't only take a financial toll on that business, but it also takes a very emotional toll, which is kind of usually hard to come back by. And yes, that's one of the huge things I think we do is we help people with, it's just amazing. Some businesses I see start, and I won't name one, but it was I'm trying to think of, I can't name the industry. People might know who it is, but they weren't actually doing anything with their cash till. They would take $300 out. They take it to the till, do business with the people that came in to buy stuff. And then the end of the year, end of the shift, they would take it back to the vault, and they never reconciled anything. And I'm like, you're just really asking to be stolen from if you're not reconciling your income and expenses. It's just a very dangerous situation, and it really bothers me because it's tough running a small business. I mean, farming is, I have a lot of respect for farmers. I wanted to do that when I was little, but I mean, they have to be so knowledgeable and have to be, you know, a certain size usually too. And it's like the same with small businesses. I really want to, you know, help them be better. I mean, you see it in the papers all the time that this person stole from, I mean, it happens to cities, it happens to everybody. I mean, you'll read the local lumber yard or the baseball. I mean, I've even seen where a CPA did it to a baseball association. And I'm like, oh my gosh. That's why, and then one of the troubles with that is when you don't put items in place to prevent that, you're going to have it because I can't remember if I remember the 3 things of fraud right now. There's opportunity, entitlement, and what's the third? Opportunity, entitlement. Anybody help me with that? Opportunity, entitlement. What? Oh, justification. That's what I always love. And it's just amazing because you're like, well, this is the greatest person in the world. They would never steal. But you know, the justification can be, I went to a seminar with a person that got in a lot of trouble for stealing, and the justification was because a lot of times you hear, well, they're gamblers, so you know that's why they're stealing. A lot of times they want to help out other people. This one person was working for a firm that made a lot, and she even suggested, you know, you should get your work audited and have controls in, but the owner was like, we don't want to do that. Well, she ended up stealing over $1 million. And did she do it to get a new car or property of her own? She wanted to buy her family another house so her parents could live close by. So I mean, it's tough. I mean, so no, that's a great question. We're a lot more than just tax planning. We try to protect your assets, move your business forward, and look at, you know, the ratios are so huge, you know, and you know, obviously they're going to be different from Fairfax to Shakopee, but there are certain standards you look at.
Sure. Last call for questions from Dennis. Going once. Going twice. Sold. Thank you, everybody, for joining us for our monthly Renville County HRA EDA Lunch and Learn. Thanks to Dennis for hosting and presenting here today. Absolutely awesome job. And if there's anything we can do for any of your businesses, please let us know at the Renville County HRA EDA. We're happy to play traffic cop, get you connected to the folks that can help. Again, thanks to all of you. If I don't see you, you have a Merry Christmas and a Happy New Year. You can keep the snow, just don't give me any. And we'll talk to you soon. Thanks, everybody.
Thanks, Jordan. Have a good week.
All right.